my name is Patrick Evans. I'm the CEO. The customary cautionary statement. As Gwen mentioned, Mayfair is a new company. We acquired a mature asset in the Timmins Gold Belt, the Fenn-Gibb project. But we only acquired it, well, in fact, less than 5 months ago. We started drilling on it 3 months ago, actually 4 months ago, and we only listed 2 months ago on the venture exchange. The investment case, we're in Timmins, and everyone knows what a favorable jurisdiction that is. We have a high quality asset, a first mine resource of nearly 2.2 million ounces, open pittable, disseminated mineralization, sitting right on Highway 101 to the east of Matheson, which in turn is east of Timmins. Low strip ratio, excellent infrastructure. The upside potential is what really attracted our attention to this opportunity, and I'm going to describe that through the presentation. An experienced board. Myself, my career started with Placidome about 25 years ago. I've been CEO of 8 junior mining companies on the TSX, 2 of which we've built mines, 1 platinum mine in South Africa and a diamond mine in the Northwest Territories. And the others have had quite favorable liquidity events as we've taken them up the value curve. A strong board, I'll describe them in a little detail on the next slide. Importantly, Ron Clayton. Tahoe once owned this asset. Ron was CEO of Tahoe and is now on our board. And Doug Cate joined our board about a week ago. He was VP of Exploration at Kirkland, who of course are a neighbor. Coming out of the blocks as a newly listed company, of course, we're not at all well known. So we're trading at about half of the peer average at the moment. So plenty of upside opportunity as the market gets to know the company and understand the value of our asset. Robust growth profile, which I'm going to address. This is our leadership. Myself, I brought 2 experienced Timmins geologists, Howard Bird and Paul DeGagnia, out of retirement to work the Fenn-Gibb asset. And that enabled us to hit the ground running very, very hard, very, very quickly after the acquisition. A small, diverse, cohesive board, a good spread of skills, finance, capital markets, mining, and exploration. This is the location of our asset. As I mentioned, we're to the east, about 80 kilometers east of Timmins, about 20 kilometers east of the town of Matheson, where our exploration office is based. I'll draw your attention to the lower slide here, which shows the gray shaded areas, which are Fenn-Gibb. The north block, where our current resource is, sits on the Pipestone Fault, and the south block, which is largely unexplored without even any road access, sits on the prolific Porcupine Fault. Fenn-Gibb, some of you will remember the name Fenn-Gibb when it was owned by Lakeshore or owned by Tahoe, but it's best described over the last 2 decades as having been a bit of an orphan asset. Not because of anything relating to the quality of the asset, but rather because of it was dwarfed within producing assets of larger companies. Pangea acquired it nearly 2 decades ago. Barrick acquired Pangea, not for Fenn-Gibb, but for East African gold assets. Fenn-Gibb becomes an orphan within Barrick until Tony McCooch comes along as CEO of Lakeshore Gold about a decade ago, and he purchased it from Barrick for $60 million. Most of the early exploration work was done by Lakeshore. And then along comes Tahoe, acquires Lakeshore, again for producing assets, not for Fenn-Gibb. Although Ron Clayton, then CEO of Tahoe, recognized the potential, did some very useful consolidation of claims in the area, and a very small exploration program before Pan American comes along and acquires Tahoe, again for the producing assets, not Fenn-Gibb. And once again, Fenn-Gibb is an orphan within a large company, until Mayfair comes along. At the end of last year, we were successful in acquiring it. And it's now, for the first time in this asset's life, the flagship asset of the company. We acquired it from Pan American for $11 million US in cash, no further payments to Pan American, no backing rights for Pan American, and a 1% royalty over the property. Looking back, many people will wonder how we were able to do such a favorable acquisition. We signed the acquisition agreement with Pan American in late March last year. As the pandemic was hitting, as mines in South America were closed, it was an ideal time to make acquisitions, and we got it at a very good price. About close to 5,000 hectares between the North and the South block. Again, our exploration office in Matheson, very fortunately, late last year, Kirkland was consolidating all of their operations into Timmins. So we were able to pick up their exploration office in Matheson for a couple of $100,000, fit for purpose, fully equipped. They even left the furniture and some computers behind. And that enabled us, even before we closed the acquisition, to move in very quickly and start building our exploration team. Historically, really about a season and a half of exploration work at Fengib, about 130,000 meters of drilling, 2 preliminary metallurgical campaigns that I'll talk about right now. So our current 43-101, with the acquisition, we had to do an updated 43-101 at the beginning of the year. We declared a resource of nearly 2.2 million ounces. Importantly, this is only the open pittable portion of the historic resources at Fengib. I'm sure many of you know there's a new rule under 43-101 that you can't include underground tonnage unless you have a conceptual underground mine plan, which we still don't have. So we had to strip out significant tonnage below the current conceptual pit, probably about 200,000 ounces. The important thing here is, as I mentioned earlier on, the disseminated mineralization. These are not narrow vein structures. The deposit has a strike of over 1 kilometer, and on the west end, it's about 300 meters wide. I touched on the preliminary metallurgical test work that's been done, 2 campaigns by Lakeshore. Preliminary campaigns, a simple flow sheet, just grinding the material down as some of the neighbors do, and you can get plus 80% recoveries. Or you can look at a more complex flow sheet, grinding, gravity, flotation, and so on, and you can get plus 90% recoveries. With the fresh core that we're now drilling, we are resuming where Lakeshore left off on the metallurgical testing. Here's an important point. Even though the grade is roughly 1 gram a ton, these are the pit optimization assumptions that we use in the 43-101. At $1,700 gold, that translates to a rock value of about 50 US per ton. Total OPEX, common for this area for open pit mines, including processing, is about $23 a ton. So an operating margin, a projected operating margin of over 50%. Resource upside, this is what it's all about. We've got a really solid first mine resource with the 2.2 million ounces, and it sits above the blue line that you see in this slide. Everything above the blue line is in the resource striking east-west for 1.25 kilometers. Above the red line, you can see there's a high-grade starter pit area, which is always desirable. There's probably about 500,000 ounces sitting above the red line, grading about 1.6 grams per ton. In terms of resource upside, there are really 3 steps in our current plan, a 50,000 meter drill program that we've embarked on, to grow the current resource from about 2.2 million ounces to over 3 million ounces by the end of the year. In no particular sequence, the first area is this expansion zone, what we call the expansion zone, below the east side of the deposit. Now, this is not underground. This is what I call below pit tonnage. We currently, we've just built 2 drill pads over here, and we're currently drilling to define tonnage and grade in this area so that we can bring that into the resource. Our hope, our expectation is that when we've completed this program, that we'll see the blue line go below the expansion zone for a larger open pit. That's the first step in our 3-step plan. The second step is the underground, and I mentioned previously that we had to exclude the underground tonnage that had been included by previous owners of the asset. And you can see the tonnage here below the conceptual pit. We guesstimate that there's about 200,000 ounces there. We have been doing some infill drilling there as the start of our program, and you can see that there's plenty of resource upside. Here's about 180 meters running at 0.74 grams a ton. That's not currently in the 43-101 resource. And then the third step in our three-step plan is mineralization near pit on strike, particularly east and west of the current conceptual pit, where some good grades have been encountered by previous operators, over a gram a ton in both directions. About 3 weeks ago, we finished the first ever airborne mag survey over the property, both the north and the south block. This was flown in both directions, north, south, east, west, high resolution, and the results are spectacular. This is the first time we're really getting a good idea of what the structure looks like at Fen Gib. In this image, you will see the line, which is the current conceptual open pit, and you can see the deposit. This is our main zone in this area, and the deformation zone highlighted in red there. Surface sampling in the past identified this horseshoe zone, which Tahoe consolidated into Fen Gib, and clearly this is a high priority target for us. Also down here, G101, historical drilling has encountered good grades, over 4 grams a ton, over 13 odd meters, and that's clearly also a high priority target for follow-up. But this footwall zone is the area that has excited us the most since we started drilling about 4 months ago. Lakeshore did some drilling in this area, weren't sure about what it is that they were encountering. These are some of the intercepts that they reported, nearly 4 grams a ton over 50 odd meters. Good intercepts, good grades, but they weren't quite sure what was going on. Nor were we when we started out, before we got the results of the airborne mag. The first drill hole that we drilled to test, both do infill in the area down here, and I'm looking at this lower image, and to test what was happening up here, encountered very, very encouraging grades in this area, similar to the grades that Lakeshore reported. Initially, we thought that this footwall zone was striking east-west, but since we got the results of the airborne, it's now clear that it's a northeast trending structure. We're currently drilling the first of 2 holes, highlighted here in red, perpendicular to the footwall zone, and we hope to replicate what Lakeshore reported then. Our current modeling indicates that this may come to surface, but obviously we have a fair bit of drilling to do to fully understand the structure. Here's the south block. I mentioned previously, largely unexplored. This is the Porcupine Fault, and you can see the structures that are gold bearing that strike across the +6 kilometers of the south block. Some previous drilling done in the mid-1980s at various areas across the south block encountered encouraging grades over relatively narrow widths. But the area that we're most interested in, that we're focusing on now, is this area circled in red to the east of the deposit. Immediately adjacent to us, to the east, is Moneta Porcupine's Golden Highway project. And then up to the northwest are the producing mines, the past producing mine Ross, and the current McEwen producing mines, the Fox mines. So a very prospective area, no road access. So we have now contracted with a driller who has helicopter portable drill rigs, and we hope to be flying our first drill rig into South Block next month. This is our work plan for the year, and in the lower part of the slide for the next couple of years. 50,000 meters of infill and expansion drilling at the first deposit to grow it to +3 million ounces. I've spoken about the airborne mag survey that we've completed. We're now analyzing the results to permit drill collars. Regional exploration drilling outside of the first deposit. We will determine the meterage once we've designed the program. And we have picked up on the environmental monitoring that Lakeshore finished off on. Our contractor is currently doing a gap analysis, and then we'll resume the monitoring that's necessary to prepare for permitting. Of course, with the fresh core, as I mentioned, we are resuming the metallurgical studies that Lakeshore did, and we expect by the end of the year to have a flow sheet trade-off study to determine what the optimal flow sheet is. And an updated 43101 by the end of the year. Next year, we expect to report a PEA during the first quarter of the year, and we expect at the beginning of the year to commence a pre-feasibility study while we continue the regional drilling and environmental monitoring. And then 23, we'll commence a feasibility study and prepare for permitting on the first mine deposit. Capital structure, about 76.5 million shares out, nearly 4 million options, no warrants, fully diluted 80 odd million shares. Insiders have about 30%, so we've got a market cap of about 140 million. As I mentioned, we started trading about 2 months ago. Pre-IPO, we had 2 million in the private company. We raised a net of 18.5 million with the IPO. So roughly 20 million in cash coming out as a public company in March. Of course, typical for a newly listed company, the founders, the founding group of the company are tied up for 3 years. A small round that we did last year to fund the acquisition cost, they are tied up, but will become progressively free trading through the course of the year. So the only really free trading stock when we came out of the blocks with the IPO was the 12% that we issued at that time. So in sum, clearly tier 1 premier jurisdiction, quality scale asset, both with the first mine resource, significant blue sky upside potential, attractive valuation, trading at half the peer average. As the Mayfair story becomes known, as the quality of our asset becomes known, the performance of our management team, we expect to get a significant re-rating. This is a slide that shows where we are. First of all, the blue shaded areas of Fengib, the north block, the south block. The hole in the ground is our first mine resource. It has a 15-kilometer radius around ourselves and our neighbors, Bonita Porcupine. I mean, clearly you can't truck 1 gram per ton ore very far. So we need to figure out how we sensibly deal with the processing of the ore from these essentially 3 deposits: Fengib, Golden Highway, and Garrison. And in the fullness of time, as we advance the Fengib project, we'll engage with Bonita to figure out what the optimal way is to process this ore. Of course, stating the obvious, we're surrounded by cash-rich, resource-hungry peers, we expect that as we progress, we will attract good attention from all of them. Thanks very much, Gwen.